I think it's going to probably lead to an improvement in their terms of trade in a narrow sense. That's what he is trying to deliver. I think one of the mistakes is this myopic focus on the trade deficit at the expense of some of America's domestic policies, which drive its own imbalances, such as like a major imbalance between savings and investment. I also think that there is something to American moral and policy-based leadership to the world that we're lacking with this administration, which has wider effects. But if you really believe that China's is out to dominate the 2020s and beyond through its dominance of next generation technology, that's getting that technology through theft, then a confrontation was inevitable, and we have a president now that's ramped it up in a very different way from his predecessor.
I just want to ask you about this week, because it feels as though investors are now waiting on the sidelines between buying and selling this market, because somewhere on the page, this is just theatre. We've seen this drama from President Trump a few times over, and we're getting a little bit used to it. There will be a deal or some resolution because it's in everybody's interest. However, if you look at the language from the Chinese side, there's now a 2-day trip. The Vice Premier, who has been very much in charge of these negotiations, now has a limited scope. How on earth is a deal expected to materialise? It feels like the deck is now stacked against any deal happening in this time frame. Is that a problem for markets?
When you say this time frame, you mean before the end of the week when tariffs are supposed to come in?
Yeah, short term, because the view is that if the tariffs stay in force for much longer than a few weeks, then we've got a problem again for the world economy potentially. So if we're not going to get any form of a resolution, we're right back to another 90-day window and extension of time, or tariffs are in force, then you would expect that to be a problem, right?
Sure. I mean, we do expect now it's more likely than not the tariffs are going to the tariff escalation will go ahead. The time frame's just too soon now, even if there's some kind of delay. We've never really been focused on a deal happening in the first half of this year, mainly because the election in the US is the back end of next year, and you're going to have to get closer to that to force the president's hand to a certain extent. So what is the balance between the improved financial conditions, signs of growth stabilization around the world, and the trade rhetoric in the creation of this market rally we've had? We will probably put trade as the kind of junior partner in that. The pivot from the Fed was probably the primary driver. The pivot from the ECB was also important. The effect of the Chinese domestic stimulus that predated the trade war, having some effect and causing some stabilization, also of great importance as well. But yeah, so it's clearly not a good thing for global markets if the trade war ramps up, and you'd have to have a hit to the more trade-sensitive parts of earnings expectations of the equity market, and that would lead to volatility in those parts. So I think it's a reason to not get over one's skis when you're participating in these markets.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.